Welcome to the Real Estate Power Play Podcast, your launch pad for skyrocketing success in real estate investing. I'm your host, Gabe Rodarte, alongside Mark Monroe. We're ready to bring you transformative stories, groundbreaking strategies, and the insider secrets of real estate giants. Get ready to accelerate your investment journey and become a true power player in the world of real estate.
Okay, we are live. My name is Mark Monroe, and with Real Estate Power Play. So if you're listening to us, please like us, share us. If you're listening to on one of the podcast formats that you're listening to, please like us and leave a comment as well. But today's episode I'm excited about is we have Scott. Scott from it's Advantage IRA. Did I say it correctly?
It's Advanta, yeah. No GE,
Advan-
but yeah, Advanta IRA.
I appreciate it. That's why I was going to have you jump in there because I knew I'd probably mess it all up. But this is great for you guys listening. If you're an investor and you are trying to raise more capital for doing some of your real estate deals, this is another alternative way of doing it. And if you have an IRA and you want to deploy your capital and get involved in real estate, this is a great vehicle. And I've used this strategy many times for myself. Inquiring notes and having people that want to invest in real estate in some of my transactions and some of my deals will go down that path as well. So I appreciate it. Scott, go ahead and why don't you go ahead and introduce yourself?
Sure, yeah. Again, thanks, Mark, for having me on. I appreciate being on and sharing the information. My name is Scott Maurer. I'm the Vice President of Sales here at Advanta IRA. I've been in the industry for the self-directed industry for, almost 17 years now. Helping people who have IRAs, have old 401ks, the things we're going to talk about today, invest in other types of assets. So yeah, I've been in the business for our company's based here in the Tampa Bay area. We also have an office in Atlanta, but we do work with clients and investor and investment partners nationwide.
That's awesome. Yeah. We came across, I'm in also another mastermind group, like multifamily mastermind, and that's where I met Scott. And you guys, I'm assuming you've been involved in some of those deals, like the ones that we just took down the multifamily up in Alaska. Did we send some people through there? And then we also have the storage facility in North Carolina. And so I'm assuming that some of the GP investors had some of their people pass through to you.
I'm sure that they did. Yeah, we honestly we deal with so many different multifamily providers and syndicators. Whether it's whether it's multifamily properties, whether it's storage units, car washes, those types of investments. We work with a number of individuals. So yeah, I know we had a couple people pass through recently as well, and got more coming in today. Obviously, I had a couple calls already today about similar investments.
So Scott, real quick, you said the word syndication. Some people that are listening to us and they never heard of the terminology of syndication. Scott, why don't you kind of explain that to the listeners, like if they have an IRA, how they can get into a syndication model?
Sure. So a syndication. So a lot of folks, I think the general public associates real estate investing. When you say, hey, a real estate investor, they think of, HGTV, right? And people, buying and flipping a property, or maybe just buying a single family home for long-term rental. And I talk about this as we go on today, that's somebody who's more active, you got to go and find that property. You have to find your tenants. You have to be involved in all aspects of the management. Real estate syndications, though, are setups where typically you have an individual or a team of individuals who find properties and do the rehab, but they're also looking for capital. And so what a syndication in doing is really putting together like a limited partnership where you have a few people in charge of the day-to-day operations, but you have a network or a number of different passive investors, people who don't have the time to do that type of day-to-day activity in regards to the properties. They set up with something called a syndication, where an individual who wants to invest in real estate but doesn't have the time to flip a property or to manage a rental can invest passively, can invest 25, 50, 100 grand at a time into a particular real estate deal. So the syndication, each time a general partner, the people that the day-to-day operators want to buy an apartment complex, want to buy a storage facility or a car wash, they're going to set up a syndication, which is basically, like I said, a limited partnership where a number of investors can come in with the capital, and then you have a couple people up front dealing with all the day-to-day operations and management of the property.
No, that's very well said. I like that. And that's great. Definitely been involved in a few of the syndication models. So that's one way they could do it in an IRA investing. I'm sure we're going to jump into your slides here in a moment, but
Mhm.
the other typical way where a lot of people, like if they're just doing a fix and flip or if they're buying like through a seller financing, once you kind of explain, do you want to explain it now or do you want to kind of jump into slides and explain it along the way? What do you think is the best way?
No, I have some slides that address it, but I mean, yeah, it's to kind of talk. We'll set the stage. I think it doesn't hurt to hear it twice sometimes. It'll make more sense later. But yeah, we have certainly two classes of clients for a lot of in a lot of respects. People who invest passively into syndications or say private loans, where they just lend money to somebody else who is doing the hard work of finding the property and getting it rehabbed. But it is possible to use your IRA account as well to buy a single family rental property, to buy a property that you want to rehab, where the IRA, puts up the money for the initial purchase. The IRA pays for any repairs, maintenance, ongoing expenses. But the benefit then is that all of the gains from that investment, so all of the rental income or the profits on a real estate flip, those funds all come back into the IRA account itself. So it gives you a different way to buy these properties, a different way to invest with money that you didn't really know that you could use. And we'll talk about that with some of the slides on why you didn't know that to begin with. But it allows you to make these investments on a tax neutral basis. The income that is generated back into your IRA account is not taxable to you in the current year. So you're allowed to continue deferring the taxes or potentially even having money growing tax free with the Roth IRA, which we'll discuss. It's really self direction is about having another source of funds to really take down any real estate investment that you're familiar with or that you want to get engaged in.
No, it's great. I can't tell you how many times I've been out talking to people. I remember I was at down in Miami at a cardiac physician convention, just hanging out at the lobby down at the Ritz-Carlton, and I just started networking and talking to people, these cardiac physicians, and they're like, I said what I do for work, and I said, I invest in real estate, and they're like, God, I wish I could get into real estate, but I just don't have the time and energy. Well, that's if you're listening and you're a real estate investor, that's ding, ding, ding going off. There is some private money, so it's a win for both parties. You can put their capital to work. They want to get in real estate, but they don't have time, and then you can use their capital IRA to kind of do real estate deals together. And you can structure that many different ways as a partnership, or if you just want them to be a private lender and But yeah, so keep that in mind if you're listening. And if you do have an IRA and you do want to invest it with some real estate investors, definitely go to Scott, myself, and we can kind of help guide you through that process. But Scott, let's just jump into some slides and I'll let
Okay.
you kind of run with it from here. Let me get you set up here, and we'll go ahead.
All right. Yeah, it sounds good. Thanks. Yeah. So the title of the presentation is raising capital with a self-directed IRA, which we've already discussed. Works a lot in the syndication model or people who are just seeking private financing. But I mean, as well, it can be used for your own personal real estate investments. The rental properties, the rehabs, etc. Here's just some information on myself. Obviously, I'm like the director of business development in Advanta. I've been here for like I said, almost over 17 years now. By degree, I'm a licensed attorney. I don't do any legal work for Advanta clients, um, but it gives me maybe a better understanding of some of the rules and how this all works. But here's my contact information if you need to reach out to me. Don't hesitate to do so. Any question, either personal or you want to, like I said, use your IRA for your own investments, or you want to use other people's IRAs. Happy to talk and discuss that. Just a little bit about our company. We have over $2.5 billion in assets. We have offices as we said at the beginning, in the Tampa Bay area, also in Atlanta. But again, we work with people all over the country. Doesn't matter where you're located. We even have some clients who are overseas who have U.S. based retirement accounts. So we're able to work with them on different investments. We have clients who own real estate overseas for investment purposes as well. Um, I mean, in talking, we've already kind of broached some of this, but really what a self-directed retirement account is, I think this is important to understand, is that a lot of brokerage firms will tell their clients they have a self-directed account because you can choose your mutual fund, you can choose your stock, whatnot inside your brokerage account that you have. But what a truly self-directed account is when you can invest in things that are outside of the stock market. Okay, so the IRS allows you to invest in anything that is not considered life insurance or is not considered a collectible. Those are the two prohibited investments that you cannot make inside of an IRA account. You cannot buy life insurance and you cannot buy collectibles. So there's a lot of different things, when you think outside of those two types of investments, a lot of different things you can do. And again, what we see at Advanta, we probably have of the over $2.5 billion in assets that we hold, 70+% of those assets are real estate in nature. It's rental properties, it's rehabs, it's syndications, it's tax liens and tax deeds, it's private loans. So a lot of different things you can do once you get your money outside of the stock market. So when we talk about a self-directed account, that's what we're discussing, is getting your money out of more conventional IRA custodians and in a place where you can then use that money to invest as you see fit. The reason people choose to self-direct, for the most part, it's like I said, a new source of capital. Mark, you're just mentioning it, at a convention where you're hearing people talk about, hey, I got some money in a retirement account, or I want to invest passively. I don't have the time to do it. A lot of people don't realize that when they're looking at an investment opportunity, they don't realize that their IRA, that old 401k account that they have, could give them the capital they need for the investment itself. Again, most people look at their savings account, what they have in the bank, and they don't consider that because their IRA custodian, their bank or their brokerage firm, is not going to tell them they have this as an option available to them with their retirement account, because Fidelity, it doesn't hold real estate, so they're not going to tell their clients that you can invest in that. So for some people, it's a new source of capital. Others, it's the tax benefits. As I mentioned, the income, the profits come back to the IRA itself, not to you personally. So the benefits of the income that you're generating are tax deferred or tax free. And for others, it's stock market fatigue. The market, as we all know, anyone who's been around for any number of years, the stock market, up and down, based on factors that are really outside of your control. What happens across the world or happens in a global economy can greatly affect your 401k, your IRA account, but you have very little control over that. So a lot of individuals look to use their IRAs, use their 401ks to invest into assets that they do understand. If they wanted to invest with you, if you're raising capital, they understand. You give them the details. Hey, I'm buying this fix and flip, or I'm buying this apartment complex. Here's the details of that investment. They may intrinsically understand that a lot more and be more comfortable investing that money with you rather than in a market that they have, like I said, very little control or influence over. It mentioned this already. Most IRAs are administered, though, by banks and brokerage firms. They're offering you the limited products. You have to invest in something on our platform. It's the equivalent of going to McDonald's for lunch, right? McDonald's for lunch, they have a menu up there. You got to pick from their menu. If you don't want something on their menu, you're going to have to go somewhere else. But again, what's different in the retirement plan industry is most people don't know that they have other options. So if you go to McDonald's for lunch, you've already made that conscious decision not to have something else for lunch that day because you know there are other options. With retirement accounts, people just think that their only options are mutual funds, stocks, bonds, and other publicly traded assets. But the brokerage firms are not going to tell you, hey, did you know you could invest in real estate syndications? Did you know you could invest in a rehab property? You could lend money to another investor. So if you're listening to this presentation, then you've already getting that information now, and hopefully be able to use it. So the IRS regulations, again, allow for a very broad range of investments. Again, anything that's not life insurance or collectibles. Those are the only two prohibited investments. But not every custodian is required to hold each and every asset. So that's why Schwab and Fidelity don't hold real estate, because they don't want to. It doesn't fit their business model. But our firm, again, is uniquely positioned to be able to do that.
Scott, I got a quick question. You mentioned the word custodian, and that might be a foreign word to somebody, especially if they're listening. Why don't you kind of explain, because that's really what you guys do. You're a custodian. So why don't you kind of explain that briefly for a minute?
Yeah, so with the IRA account, so anyone who has a personal savings account where it's just an account in your name, you open up a second account at your bank and you have direct control over that money, as you either save, put more money in for savings, pull money out, and you have that direct control. But when it comes to IRAs and retirement accounts, there's certain tax reporting that has to be done on an annual basis, certain rules that have to be followed. And because of that, the IRS requires that if you want to have money in an IRA account or you have money in an IRA, you have to have a third party custodian actually holding the funds and doing that reporting. Because IRAs, most IRA accounts, when you take money out personally, you may have to pay tax on that money. The IRS wants a custodian in charge of reporting that tax. If it was just in your own individual account that you can control, the IRS is going to lose a lot of tax revenue for people who failure to report or forget to report. So every IRA has to be held by a custodian, and a custodian could be us holding Advanta IRA, holding real estate and other alternative investments. It could be a Schwab or a Fidelity. It could be a bank where you've set up an IRA account where you have to go through them to initiate the funds. So that's really what a custodian's job is to hold the investments and take care of all the annual reporting to the IRS.
Great. And we'll go back to the slides, but at the end here, we're going to ask you a question a little bit more about like, hey, what's that process look like when we get a little bit further along? So,
Sure.
all right, let me go ahead and put that back up.
Yep. So I think, again, people listening to the presentation, hopefully have a lot of people looking to raise capital. I think a few reasons why I think retirement accounts are a really good capital source, right? If you're really thinking, okay, why, if I'm raising capital, do I need to know about IRAs? Well, one, again, there's the bottom right corner, there's $37.5 trillion in IRAs and 401ks. There's a lot of money in those accounts. And the best estimate is about 5% of that money is in a self-directed capacity. So there are a lot of people who don't know this is possible. That people have money sitting in IRAs, they have money sitting in an old 401k, and they don't know this is even possible. So for you, if you're looking to raise capital, it could be as easy as going to your existing investors. If you already have other projects in the works, when you present a new opportunity for them, show, hey, here's a different way you can invest next time. You could use your IRA. So an investor who may have been tapped out to some extent on what they could do individually now can use their IRA to invest in your next projects. I think for that one purpose, that's a great reason. You don't have to go out and necessarily find new investors. But when you are going out and looking and you're talking to people at investment meetings, you're doing one-on-ones, there are a lot of people who are looking for alternatives. Again, with the market uncertainty, even when the market's high, people are still getting nervous. When the market's low, people get nervous. People are always uncertain about the stock market because, again, people have seen the history of that market going up and down. So they're looking for other things to do with their IRA and their 401k. When you show them another investment, you tell them about a self-directed IRA is another way to do it. That's going to open up more capital for you. And lastly, I think probably one of the biggest reasons, though, why IRAs and 401ks are such a good capital source is that, again, if you're talking to an investor and you want them to invest $50,000 or $100,000 with you, and they may have that money in a savings account, but that savings account is there for loss of job, medical emergencies, kids' tuition, things like that, where they don't necessarily want to touch that money. They need that cash. They need those funds in a liquid position. So they don't necessarily want to put it into your syndication, which may lock up their money for 3 to 5 or even longer period of time. But the IRAs, the 401ks, that's not their rainy day fund. That money is there for retirement. They may be 15, 20, even 30 or 40 years away from pulling that money out in retirement. They may be willing to put that money into a 3, 5, or even longer term investment because they're not looking at needing that money right away anyway. So when you're presenting the opportunity to them, hey, this is my project, this is what I need, and here are a couple different ways you can invest, it's going to show them another option that they didn't know that they had. Again, because most people aren't aware that this is even an option with their IRAs and 401ks.
Scott, I want
Yeah,
to jump back here 1 second. You said
sure.
something before about people wanting to diversify, and because they're worried about the stock market. I can't tell you how many times I've talked to people where they just, like you said, they don't want to have all their eggs in one basket in the stock market for their retirement. So that's why they like to use this strategy because they want to diversify. As you know, when you do the research, 90% of millionaires are done through real estate, and that's kind of why they like tapping into using the IRA, using this model. So, and it's good. And it's the same thing, when we're sitting there talking to sellers and we're getting opportunities doing seller financing. they get it. They want to diversify. That's why they like to hold in mortgage note. And this is the exact same thing. You can end up holding your mortgage note. But I just wanted to kind of tap in that a little bit because some of these people listening, like, they're thinking that they might be taking all the money out of the market and moving it over here, but no, they're diversifying it through this vehicle. So
Yeah, that's an excellent point. So I don't know. Sometimes I mention, sometimes I don't. But a great point there, Mark. Self-direction and using your IRA funds to invest in the assets you can see on this slide, all these different types of real estate assets. It is not an all or nothing strategy with your IRA account. You are permitted to just move a portion of funds from your existing IRA to make an investment. So if you only need 50 grand of your, $200,000 IRA account to invest in a syndication, you only need to move that $50,000 over to make the investment. You do not have to move the whole thing. In fact, most of our clients at Advanta IRA have funds both with us invested in a real estate asset, and they have money sitting in a brokerage asset. Like you said, Mark, they're properly diversifying amongst different asset classes, or taking advantage of opportunities by using a self-directed account. So whether it's rental property, commercial, rehabs, multifamily, REITs, you can invest in raw land if you want. Really, any type of real estate can be invested using a self-directed IRA. You can any type of investment. Now, the only restriction when it comes to investing in real estate with your IRA is that you cannot invest in property that you already own. So if you already own a rental property, you can't use your IRA to help fix it up or buy it from yourself. And you also cannot use your IRA to lend you money or certain disqualified persons. So any property you own, if you're looking to acquire a property, it has to be the IRA purchasing the asset as its own investment. And it can't be a property that you're looking to get any personal use out of. So if it's a second home that you're looking to buy, maybe you're going to Airbnb it 6 months of the year, but you're going to live in it the other 6 months, that does not work with an IRA. It has to be strictly for investment purposes. So that's when we're talking about syndications a lot of the time. Very rarely do those rules come into effect. You're investing in somebody else's apartment complex, somebody else's storage facility, car wash, etc. So again, any type of real estate, outside of the real estate market, people invest in, gold and silver, startup companies. Again, as long as it's not life insurance or collectibles, you can make that type of an investment. Now, as far as the account types, any type of IRA qualifies to be self-directed. Traditionals, Roth IRAs, which are individual accounts. There are SEP IRAs and simple IRAs for people who own small businesses or who may work for a small business. If you have an account type, if you're looking at your statement and it says IRA on it, you can move all or a portion of those funds to a self-directed account. In addition to the IRAs, we also offer solo 401ks, people who are self-employed. Don't have any employees. It's a special retirement account that allows you to contribute more money each year into a plan to be able to invest. But probably the biggest bucket on here that people forget about is the former employer plans. You have an old 401k, an old 403b, an old 457. Maybe you worked for the federal government. You have a thrift savings plan. Those former employer plans, once you are no longer with that particular employer, you can roll that money over into an IRA account and then be able to invest in the assets that we're talking about today. So a lot of people forget about those old employer plans. In the chaos, so to speak, of leaving one job and taking a new one. You're starting a new job. Maybe you're changing cities and lost and all that. A lot of people will forget about those old 401k plans, or just they won't pay attention to them. But those monies can be used as well. So any IRA, any old employer plan, the only restriction on money being able to be used to be self-directed is with current 401k plans. So if somebody has a current employer plan that's active with their current employer, they may be restricted from moving that money over. So that's the only, unfortunately, negative of those types of plans.
Scott, before you move on here, this comes up all the time, and maybe you can kind of give some advice here. Everybody's always asking, what's the difference between a traditional IRA and a Roth IRA? You want to give just a quick overview on that?
Sure, absolutely. The differences between a traditional and Roth is simply when are you going to pay the tax on the money? With a traditional IRA, you make a contribution. You put money out of your pocket into the account on an annual basis. Most of the time, you will get a tax deduction. So on your tax return. So if I put $6,000 into a traditional IRA, I get a write-off that year on my taxes. So I save a little bit on my current tax bill. So the traditional IRA, that money is deemed to go into the account on a pre-tax basis. It's going to grow tax deferred, so there's no taxes paid while I'm investing and reinvesting that money inside the account. But when I pull money out of a traditional IRA in retirement, I am taxed on the money at that time. So you'll be taxed on the plant, so to speak, not on the seed. You put the money in pre-tax, it grows and grows and grows. You pay taxes when you pull the money out in retirement. Now, the Roth IRA is essentially the inverse of that. When you contribute money to a Roth IRA, if you put $6,000 into a Roth IRA account this year, it's not going to help you at all in your current tax bill. You get no deduction whatsoever. The benefit is that money, though, is deemed to go into that account on a post-tax or after-tax basis. And that money is going to invest and reinvest over time, and you're not going to pay taxes. And when you reach retirement with a Roth IRA, once you're over 59 and a half and you've had the account for 5 years, all of those gains are completely tax-free to you. So the difference between the Roth and the traditional, am I going to pay the tax up front on the seed with a Roth IRA and then not have any taxes due at all later on? Or do I need that tax break up front with the traditional IRA? And I understand I'm going to pay tax eventually down the line. I think most people prefer and favor the Roth IRA for that reason, that you have all this tax-free growth. But not everybody has a Roth IRA. A lot of old 401ks are pre-tax accounts where that money gets rolled into a traditional IRA.
Thank you. That was good. Very well put. So, yeah. So, if you're putting money into it and it grows, do you know that statistically what a return? I guess it's hard to determine what a return on the IRAs are over time. I guess it depends on what assets they're investing in.
Absolutely, it's going to depend on the assets. I know that they say
Yeah.
the stock market, what is 7 to 8% on average. So a lot of people would then associate that as the rate of return for their IRA because that's where most funds are at. But I can tell you, I've seen people do quite a bit higher returns. If you're investing in a syndication where you may be getting 16, 18, 20% overall, that's or year over year, that's the return going back into your IRA. So it's really what investment are you choosing to have inside your IRA account to drive that return. So yeah, it is hard to get historical numbers, especially in our industry, because you do have people, some people who hold raw land. They buy a piece of vacant land in year one, no income, no profits at all until year 5 when they sell it. And so you would have to go back and calculate that. Or conversely, individuals who are investing where they're getting an 8 to 10% preferred return each year until year 5, maybe when they get the profits on the sale of a property. So it is hard to determine at times.
I got it. All right. Thanks.
Oops, so went a little too quick there. So the question then becomes, you have an IRA, you're looking at your statement, I have an IRA or I have that old 401k, is how do I get that money positioned within a self-directed account? And it's done either by a transfer, which is when you move money from one IRA to another, or when you do a direct rollover with that money coming from that old employer's plan into an IRA account. Both are non-taxable events. There's very little tax reporting done at all, but you can move. Again, the key thing to take away when you move money from one account to another, as long as it doesn't touch your hands, there is no tax consequence whatsoever. It's either a transfer or a direct rollover. When you're talking with us, we'll make sure you take that proper steps. They're initiated a little bit differently. With a transfer, we can request that money. Advanta will request that money on your behalf. With a direct rollover, a lot of times you, as the account holder, have to request that direct rollover. Again, again, I mentioned a minute ago, it's not an all or nothing strategy. You can do partial transfers and partial rollovers. You do not have to move the entire account over into a self-directed IRA. And the process of moving money can take anywhere from a few days to a few weeks. It just depends on who your custodian is, what their requirements are, and what their processing times are.
Got it. I was just going to ask that question. Like, if I have an investor that wants to put some of their capital to work out of their IRA, what's that process? Because and this is a tricky part for some investors because you need to line up that capital just in time when you're going to be closing on a deal. So keep that in mind if you're looking at that. This could take a couple days to what, like a couple weeks, Scott?
It does. I mean, yeah, on the shorter side, usually it's a week. It can take though 2 to 3. Again, it just depends on who your other custodian is. Now, a lot of the bigger firms like Fidelity and Schwab and E-Trade, and Vanguard, they will fax, they will accept fax requests and they will wire money to us. We get money usually within that week period. Other companies and a lot of the old 401ks, unfortunately, insist on mailing checks to us. They will not wire funds. And so that's where you're going to find the 2 to 3 week delay. But yeah, when you're talking to your investors, if you have that time up front, if you're going to have a couple weeks, to get the subscription documents completed, and the investment paperwork in good order, and then ultimately get the funds, at least get them started earlier and let them know this is not, in this day and age when people have bank accounts, you have like, two bank accounts at a particular institution, you can just click a couple buttons and you move money from one to the other. Unfortunately, with IRAs and 401ks, it is not that easy. So that's something just to stress to people. If you're looking at using your IRA, looking at using your 401k, you got to get that process started a little bit sooner because it's going to take a little bit longer.
Yeah, I've seen that happen before where a deal is going through and whoever they had their IRA with, it took a process and it held up the whole entire closing and they almost lost the deal because this investor was going to become the note holder holding the
Mhm.
paper. And even investor that had the IRA was even getting frustrated because they felt like they're dragging it out because they didn't want to lose the money out of their fund. That's kind of what we felt on that one.
Yeah, that's I think that's a common feeling. Yeah, if that other custodian won't let go of the money because they're trying to keep you from moving the money off their platform. Now, a lot of times we do work with back offices, and it's a matter of, hey, you didn't liquidate your account. You needed to sell off mutual funds or stocks to make cash available. And we tell people up front to do that. There's ways certainly to mitigate and make things happen much more quickly.
Yeah, because it's true, because it could take a couple of days just for that to clear when you sell something off to end it into your account. So keep that in mind. So I just wanted to kind of point that out. If you guys are using your IRA, you need to make sure that you give yourself enough time. Is it like Scott was saying, it's just not a quick and it's not going to be a wire the next day. So thanks, Scott.
Yep, no problem. So let's get into a couple. Let's get in two case studies. Basically, one, buying rental property. So this again, if you're looking, you have your own funds. You want to put money into your own deal. This is kind of what this would look like. So in this particular case study, you have an individual who's got money in an old 401k account, wants to purchase, and maybe update a little rental property down the street from his house. John in this case is the 401k owner. His responsibility. He's going to need to open up his account with us. He's going to request that direct rollover from his old 401k account. But I think one important thing we haven't mentioned yet with a self-directed account, John is going to have to find the investment property. So, if you were to go to a brokerage firm, they may sell you on certain mutual funds or annuities or stocks and whatnot. With the self-directed IRA, you have to bring the deal to the custodian. So in this case, John has to come to Advanta and say, I want to buy this particular property. We are not going to try to sell him on different assets. We're not going to try to put him into different products. That is going to be completely up to John as the account holder to drive this purchase. So he finds the investment property, does his due diligence, and then ultimately makes an offer to buy the property in the name of the IRA account. And then he's going to notify us and say, hey, Advanta, I'm buying this particular property. And then we will take over from there and work with the closing agent, because this is just a standard single family home property he's buying. We will work with the title agent or the attorney doing the closing. We want to make sure whenever an investment's made with an IRA account that the IRA is properly listed as the actual investor. And we'll see that on the next slide. Ultimately, we sign documents on behalf of the IRA and we wire the money out of John's account. So John would have opened his account, filled out our paperwork, takes a couple minutes to do that, rolled over the funds from his old 401k. Again, that can take maybe 2 to 3 weeks. So his account was open. It had the cash. We make sure that the investment documents, in this case, the deed, settlement statement, title policies, etc., reflect his IRA account as the actual owner. And then we send the money out of the account. And then going forward, any income from this property, so the rents, John's going to find his tenant, have them send the rents back into his IRA account with us. Any expense that he has, property insurance, taxes, maintenance items, all of that needs to be paid out of the IRA account. And as the administrator and custodian of his account, that's what we're going to do at Advanta. We're going to receive and deposit the income to his account. He says, hey, I need you to pay this bill. We take care of doing all that. But again, John has to drive all of that particular activity. And so here's an example at the very top. The property be purchased in the name of his IRA account. So the actual titling on the deed would be Advanta IRA for benefit of, or FBO, John Smith IRA and his account number. We'll see this wording again here in our other case study when we talk about syndication investments. In this case, all of the funds for the purchase came from the IRA account. The IRA just owned it 100% free and clear. It is possible, though, your IRA could partner up with other people. We've certainly seen a number of individuals do that, where they've used their IRA funds, a friend's IRA, or maybe two spouses each use their IRA accounts to buy a property. And then when you do that, when you partner up with others, kind of intuitively, you would split the income and expenses between the partners according to their ownership percentages. And again, all of the income, the rental income, if John decides to sell this property down the line, all of that money is going to go back into his IRA, tax-free, no tax consequence to him as that money returns to his IRA account. Again, when it comes to expenses, John would submit the bill to us. He can just email it to us, or he can log into our we have an online portal. You just log in, please send a check to this particular individual. We get that check cut and paid out of the account. If you'd prefer to use a property manager, that is acceptable as well. The property manager would collect the rents, pay the bills, and then forward the net each month back to us for deposit, again, into your IRA account. So in this case study, again, the rental income that came back into the account comes, the $1,500 a month for 2 years is all money back in his IRA. Any profits when he sells the property comes back into the account as well. So he has, presumably more money now to use for his next particular investment. In this example, he sells the property or holds it for 2 years for rent. He could have bought the property, fixed it up a little bit, and then sold it right away. There's no restriction on flipping within your IRA account as well. So again, I think I have a slide towards the end. If not, we'll discuss it as well. But active versus passive investors. So in that last example, John is more of an active participant, right? He has to go out and find the property. He has to find his tenants. If the property needs a new roof, he needs to arrange that with a roofing company. He needs to find a roofer to do it. So a little bit more active, right? John's gonna have more hands-on activity. But in this case, we're going to see, Bill is more of a passive investor. And we talked a little bit already about multifamily syndications. In this example, Nicole is a multifamily syndicator. So she found an apartment complex. She needs to raise about $2 million in private money to be able to go towards closing. So Nicole is going to work with an attorney to get her syndication set up. She needs to get the proper legal filings, all the proper legal documents that will allow her to then bring in passive investors into her limited partnership arrangements. So the syndication is set up with Nicole as a GP or general partner who's going to be in control and in charge of the investment. And Bill is coming in as an LP or a limited partner to invest, basically up to, at least a minimum of $50,000 or more into the syndication. So Bill, similar to John in the last example, is going to take the steps to fill out paperwork to establish the account, transfer money from his other Roth IRA into the Advanta IRA Roth account, and then we will submit that paperwork, and then we're going to ask Nicole for the subscription documents. For anyone has not invested in a syndication before or a partnership, there are what's called subscription documents. It's basically almost like your application or your paperwork to become an investor in that partnership. In the last case study, it was important that the deed to the property gets titled in the name of John's IRA account. In this particular example, Bill is making an investment into the syndication, so it's important that those subscription documents are reflecting his IRA account as the actual owner. So you can see it again here that Bill, the Advanta account manager, will work with him, will work with Nicole to make sure those subscription documents show Advanta IRA for benefit of Bill Jones and his account as the actual subscriber. Additionally, the tax ID number that is used will be Advanta's trust tax ID number, not Bill's social. So all of the income reporting. So when Nicole is sending those quarterly dividends back to his IRA account, that is all being reported to Advanta's trust tax ID number, not to Bill's social security number. So again, the money is coming all back into his IRA account. Ultimately, again, we will sign the subscription documents. We wire money out of his account to fund the initial purchase. And then going forward, those quarterly dividends all come back into Bill's IRA each year. And then ultimately, if Nicole, she updates the unit, she refinances, pays back her investors, or sells the property, again, the additional capital, the additional cash comes back into her IRA account as well. No, I'm sorry, to Bill's IRA account as well. So he has all those gains, about a 15% return coming back in his IRA from the syndication. So again, this is an example where Bill invested more on a passive basis. Up front, he had to analyze the investment itself, do his due diligence on the property, do his due diligence on Nicole to be comfortable with the investment. But then once that is done, the IRA makes the investment, and he sits back and gets what one of our clients calls mailbox money, as you can see here on this slide, a more passive investor, where he's not going to have as much time now going forward. He's not going to be in control over the investment. Nicole is taking care of all the nitty gritty and the details, but that money is simply coming back into his IRA on a monthly basis. So again, we talked a little bit already about active and passive investors and the different types of investments people are kind of geared towards. It really depends on your personality, I think. Do you want to be more in control and be the decision maker, even though that's going to require more of your time? Or do you want to make some of your decisions up front and sit back and let somebody else handle all of that other work?
Scott, I wanted to kind of jump in here a little bit because what I see quite a bit as a real estate investor, we see passive investors are also considered like what's called gap funding lenders. You probably see that. So there's times where I've actually purchased properties through a seller financing, but we may need $30,000 to fix the property up. And that's where I've used people that have IRAs become the gap lender, if they will, and they're collecting a passive income depending on the term of the arrangement, 3 years, 5 years, whatever it may be. So I just wanted to point that out as well. So your investors or people that have capital that want to kind of become a passive investor, there's ways of doing that as well. I'm sorry.
Yeah, exactly. No, I think that's on the passive side there, right? The private lending, and that's syndications are more of you're grabbing a number of different individuals all to invest in the same project. But we do see a lot of private lending or peer-to-peer lending where it's the IRA is just providing a loan to one other individual for their real estate project. Could be for the entire acquisition, or it could be, like you said, Mark, just the financing needed for the rehab part of the project. And the thing I like really about private lending within an IRA is, the terms are really whatever you set between yourself and your borrower, right? So if you and I were doing a deal together, we're going to come to an agreement on what the terms are. I'm going to lend you 50 grand, and this is how I'm getting paid back. And we can be a little more fluid, a little more flexible with how that works. So that's we do a whole other class on private lending in an IRA account. As we look to wrap up here, I did want to say, kind of offer just a couple things how we help people. Again, Advanto, if you're looking to raise capital, we cannot sell or endorse your investment. That's simply, we're not allowed to do that. And say, you should invest with so and so, or hey, reach out to our clients and say, look at this particular investment. It looks good to us. We can't do that. But what we can do is try to help you educate your investors on how they can use their IRAs, how they can use their 401k accounts. And we can do that through private landing pages and marketing flyers, which we customize with your logo, your contact information. You can use those in email blasts, putting the link on your website. And we can even do different versions for you if you'd like, if you have different projects or different types of investments. We can certainly do conference calls with private calls with you and your investors, or even doing online webinars. If you wanted to host an online event and invite your particular investors on a project, we can come on and talk about the IRAs, and you talk about your investment. So you can say, hey, I'm looking to raise capital. Here's my deal. I need $50,000 investors. Again, we can't endorse the investment. We can just simply say, if you like what you're hearing here, you can use your IRA to make that investment. So all of the ways we can help, it's all free of charge to do the landing page, the marketing flyers. Here's an example of kind of what they look like. On the left is an example of a landing page itself. Where we can put together ways for people to engage and have your information. You can see the logo there at the bottom, or on the right side of this slide is a flyer where we even grab the colors from your logo and make sure the right colors line up and show people how they can invest with you. So these are things we can do free of charge. You just reach out to me, let me know that you need it, and we'll get started. But Mark, I really don't have any prepared remarks. I'm sure maybe you have a couple other questions or things you wanted to go over. I'm happy to get those answered also.
I think you did a great job. I really, really appreciate it. I asked questions along the way. That was probably, I guess I could have waited to the end, but I was just different parts of it. I just wanted to kind of jump in. But no, I use this vehicle often, for all taking down real estate deals because as a real estate investor, you're always kind of your capital is tied up in assets, so you need to bring partners in, and it's a win. So you know, people that are listening and your investors, don't be afraid of asking people. Um, you know, you want to. It's more of you're helping them to achieve their better return. So you want to make sure you're getting a better return than what the market is doing. So keep that in mind. So it's a win for everybody. It's a win for whoever has some capital in an IRA. You're putting it into a real estate asset. You as the investor, you're getting rewarded for finding a good deal, structuring a good deal, and you're also passing it on to your money partners using the IRA. So keep that in mind. So I love it. Thanks so much, Scott. Like, how would people get in touch with you?
Yeah, I mean, I think the best way is they can reach out to me on my. You just reach out to me. My email is I think I had it on a previous slide. Just give me a call, 800-425-0653. My direct extension is 1123. Our website, advanceira.com. A lot of great information. We have links to our YouTube page. We do a lot of webinars ourselves, one or two a week, and we record those, put them up on our YouTube page. So just reach out to me. Like I said, if it's your individual question, it's your account that you had, you want to explore, or hey, I want to talk more about reaching out to other investors and raising my own capital. Happy to help. Again, whether it's a call, whether it's doing a webinar, developing some materials for you as well. Don't hesitate to ask.
And anybody that's if you're listening to this as a rewind, if you do have any questions wherever you're watching this, just post your question in there, and I'll if there's anything, I'll have Scott try to respond back. But also, if you have questions, you can reach directly out to Scott as well. He just posted the phone, just mentioned the phone number. So, thank you so much for Scott for coming on, and thank you all for listening. Please share us, like us, and I appreciate you guys listening. Thanks so much, Scott. I really appreciate it.
All right, thanks, Mark. Appreciate it.
Take care, guys. Bye bye.